jump straight in. 1 minute. Yeah, let's go ahead. Thank you.
Yeah. So you saw the 20th of February intraday reversal, and since then, Lily, for example, has just been in this range of 774 to call it 800.
800, yeah.
And it continues to consolidate. So, I mean, this is not too dissimilar to what you saw in the fourth quarter, right? Where you had the slowing upside momentum and you spent 3 months in a consolidation pattern, right?
And this time it's a bit unusual because Novo crushed it, right? And probably pushed it to a number 2 spot. So I'm surprised Lily didn't shake off and just go with the Max 7. You know, normally what's good news for Novo is also good news for Lily. Yeah, but it's okay.
Yeah, maybe as these things mature, you get more selective, right?
That's true. Maybe if we take a step back, right? Can we just talk about, ironically, right? We start the healthcare conversation with NVIDIA first, right? I just want to make sure that's not gonna trip me up first. NASDAQ on NVIDIA.
I mean, just on NVIDIA, you've also started to see an increase in volatility, right? So this is just the Lily and NVIDIA overlay, right?
Yeah, and we've just seen that right before, right? In your chart, it's just probably just encountered a month ago of the same magnitude.
Yep.
If not bigger, right? Yeah.
Let me just get the live NVIDIA chart.
Yeah, no problem. Ironically now, Lily is part of the Magnificent Seven. Right. So
well, I mean, it's probably, you could replace Apple or Tesla with Eli Lilly, right? Rather.
Apple, oh my God.
Because there's been no trend in that. So yeah, Magnificent Seven's got a bit more concentrated.
Yeah.
Sorry,
I know, I'm looking for it as well. I don't see it. Just mute myself.
So like Lily, NVIDIA has also got the price momentum divergence. You know, what we haven't seen is a break of the 20-day, and that's quite critical because the last time we went into the holding pattern for NVIDIA, you did break the 20-day. But you have signs of a maturing uptrend with the slowing upside momentum.
Yeah, I see. So if it breaks the green line, it's of concern, right? Right now, it's not.
Well, it should at least lead to a period of consolidation. I mean, I'll take this chart back just to highlight, going back to 2018, there was only one occasion where you didn't have a divergence and you had a meaningful correction. And then the two large declines, 2018 as well as 2022, you had more macro involvement in these big declines here with the divergence. But if you look at the consolidation pattern in October 2020, in August 21, and what you saw last year, those divergences led to more of a trading range. So, with credit spreads still quite compliant for risk taking, 10-year yield in a trading range, is that this divergence points more to a trading range like last year. So I do think a break of the 20-day one suggests that, the uptrend is now consolidating.
Yeah.
But you do have, downside risk where you could see NVIDIA, back towards the 700, 740 support zone, right?
Wow. Okay. Wow, that would be devastating for Lily. So I have to keep watching this.
But yeah. I mean, if you look at this chart, was this devastating for Lily?
Yeah. Well, it is in a sense, right? Because that would be the October pullback, right?
Yeah, but it turned out to be a trading range. It just depends how short term and how much volatility, I guess, you can stomach in it. You were already in a trading range here that, Lily continues to respect 725 as support and 800 as resistance. So you got two pretty distinct levels already over the past month.
Yeah, that's cool. And if I'm not wrong, right, I should be buying now to get to this to sell it closer to 800, right? That seems to be the message as well, because it's unless it breaks through 725, right?
Yeah. So that's, the fact that you spent 3 months trading in that narrow range, expecting a similar range, is that yes, you you can keep a pretty tight stop level already at 725 or a move back to 800.
Got it. I need to know where the stop is as well. That's great. While we're at it, do you have anything on the Nasdaq, or is that no longer relevant? Do you have an index for Magnificent 7? Yeah.
Well, there is a Magnificent 7 index. Do you want to look at that, or do you?
Yeah. Let's do the Mag 7 then.
が1だとすると、アフターマーケットが2で、貴金属が3だったら、貴金属のアフターマーケットが6とかになって、きれいな絵が描かれてる。で、時期もやっぱりハイブリッドもう一回見直そうみたいな雰囲気になってるから、ちょうど
BM. Oh, the Bloomberg. I was thinking what B stands for.
Yeah.
そうそうそう。それはじゃあ、なんだっけ、静電着って言った。
So, I mean, if you look at the momentum indicator.
Oh, that's also divergent. Huh?
Yep. So again, this was the fourth quarter trading range that you had before the stock broke out, or the stocks broke out. Microsoft and Meta were first, and then in January you had Nvidia that broke out. But like I say, obviously Apple and Tesla are a drag on this index because they're not trending.
Got it. Okay, no problem. And any levels to watch to say that it's going to go a lot lower, the supports?
Well, you can see the 50-day has been acting as support since November, right? So,
wow,
you know,
50 is so far away, man. It's so scary.
Yeah, but it's the level that's been respected. So the point is you can correct 5% and still be above the 50-day.
Okay. Cool. This is very helpful. And then anything on the 10-year? Because this thing is went up yesterday and then there was a rip out rally, right? Strange.
So there's a few things on. So, you know, one point is late last year's decline in yields, you know, put it well back into the trading range that you saw between 22 and 23. And you can see, you know, the rebound from the December, January lows got back to the upper boundary of that range. That's basically 4.36. So that's the resistance zone. What we saw last week was a break of the 50-day, but yesterday you did close back above it. So you're getting a bit of volatility around it. You know, what you really need to see to have yields sort of pushing lower is like this sort of volatility around the 50-day. But then once you push below it, you know, this would put yields well into the trading range.
Yeah.
And the next sort of big level is 3.75 to 3.78. So it is in a narrower range.
Yeah, it means that the equities rally should carry on if let's say this thing stops dipping back downwards, right?
Well, I think you've got to be careful on the equity market rally because, and why I say that is different parts of the market rally with the yields, right? So you can see Magnificent 7, Japan, India have rallied when yields have risen. So this is bond prices, not yields, but basically yields had risen from the December lows, and the best performing parts of the market was Magnificent 7, Japan, and India. But when you have yields fall, what tends to outperform is small caps, Asia, emerging markets, and then ARK Innovation.
So is the XBI on the right as well? I know it's not here, but yeah.
Russell 2000 essentially looks quite similar to XBI. So yeah, the point is if yields come down, XBI should outperform like it did in the fourth quarter.
Yeah, no, this is very helpful. Great. I think I'll arrange a separate time for macro call rather than take up my ticker's time. Cool. I'll just go into the main names. Just a quick sum on Lilly first, and then Novo. Novo is my main position now, and then Merck. Yeah.
So Lilly straightforward, 725 to 800 is the trading range.
Yeah, and the momentum.
And you do have slowing upside momentum.
Okay, I see.
So that reinforces the idea of this being a trading range.
Got it. And Novo? Yeah.
So Novo, you can see two things of note. The breakout from the January trading range. So the January trading range dated all the way back to the October highs. That upside target was 828, which you've met. Okay, so that positive breakout's played out. This week's move up with the news has not been confirmed by the momentum indicator.
Oh my goodness. So it's as good. It's like a blowout, home run news. And yet the momentum don't confirm it, huh?
Well, you'd imagine that some of that news has been priced in before. This was the reaction to the headline, but the momentum indicator hasn't confirmed it. I mean, if you were keeping a very simple support level, that green average is again the 20-day.
Yeah.
862, right?
Yes.
So again, you saw the last time you had that divergence, once you broke the 20-day, it just sort of reinforced the idea of a consolidation pattern.
Okay, so this is also consolidating, right?
Well, this is set up the first divergence. Lily's already consolidating. It's got the boundary. This is showing you that this move late last week
range,
is now starting to slow, and we should anticipate, a consolidation pattern to consolidate the gains that you've seen.
Got it. No, very helpful. Okay, then Astra, and then Daiichi.
Yeah, so Astra has managed to recapture and back into the old trading range.
Yeah, this is a strange animal. Screw me either way, every time. So is this a buy, or that blue line is tough, right? Yeah.
Well, it is resistance at 10,604, but you got to think of this similar to those other stocks that had failed breaks and then rebounded to the top of the range, right? So to me, this is all about the trading range again of essentially 10,000 to 11,200.
I'll short 11,200 against all the fundamental points. Let's see. Okay, but 10, it breaks out of 1060, right? It's at 10,600. It's actually worth chasing, right?
Well, you got to trade to the top of the range.
Yeah.
Which is at 11,200.
Yeah. Okay. Then Daiichi, this one's very bizarre. It's very weak and contrary to Astra.
Well, I mean, it had outperformed Astra while Astra sold off, so they sort of switching places. Here you did have momentum confirm the highs at 5,129.
Yeah.
You're pulling back to the 50-day. You also have the old breakout area as additional support at 4,300. So I suspect that you have another push up to the 5,370 area, because that's the upside target from that original breakout that you saw back in January.
And you remember I had this conversation with you on Novo. I said, I don't understand why Novo's trading is so dumb, right? And there's something massive coming and it's slightly positive. I'm going to make the same comment on Daiichi.
Yeah.
So the share price, like even today, right, down 3 is just bizarre. And last time, like the momentum confirms the highs, right? But so you think that first the red line and then the 4,300 area is where it's defended.
Well, no, so my point is this is support. The fact that momentum's confirmed the highs, I think this is where you can buy the stock. Where are we wrong? Is that if you break below 43.80, right?
43. Oh, that's 4,400. Okay, got it. Okay, this is awesome. But the momentum looks like crap, right?
Well, momentum confirmed the highs here. I mean, I think this is suffering more from a Japan unwind of some of the momentum trades at the index level. So I think there's just some macro trades getting unwind with the yen strength that you've seen and the expectation of the BOJ. So I think Japan in general has seen an unwind of those momentum trades, which worked really well since January, right?
I see. And then 4,519, which is the puzzling one. Why doesn't it suffer from the same momentum unwind? Chugai.
I mean, this is interesting because you still have momentum not confirming the highs here. So
and
this
it's pushing
last
new highs, right? Yeah.
This last push to new highs, momentum hasn't confirmed it. So that divergence is still in place. What you probably find out as this thing's done before is that this old ceiling becomes a new floor. So around 6,000 is support, but that's where it leads correct to from current levels.
And this thing, right, doesn't respect the divergence at all. You know, and then it does this kind of weird intraday 10% move and then comes back straight up. Okay, I see. Yeah, cool. Merck, MRK.
So here you've had so two things. One, the breakout had a 135 upside target, but before we could get to that target, momentum has started to slow, and now you're sitting on the 50-day. So if you can't hold this 50-day, it does look like you roll back towards the 115 area, which is your old breakout point. And then, I would suspect that you try and form a higher trading range with 115 becoming the new floor. So break below the 50-day does take it down a bit further.
But is it likely to, because actually it has a big date coming up on 26th of March. Is this and it's likely positive, right? You think it can go to 135?
So the technical and momentum profile have all weakened, right? And a break below the 50-day would add further evidence of weakness.
Yeah.
If you want to buy it before the events, I mean, I can't even, you can use the intraday lows here, but I don't have.
Yeah.
I mean, if I just think about it from a risk reward side, you've got your downside risk, which is 5% away. Your upside potential is 9% away. So you can generate a 2-to-1 risk reward if you use 115 as a stop level and buy from here back to 115, looking for a move back to 135.
But if I have a positive fundamental, I should be absolutely buying at 115, right? I should be lighter now, and if it gets to 115, then buy a lot of it, right?
Yeah, I mean, you might run the risk of not getting down to that level. The point is you've got 5% downside risk. So where does this picture change from the breakout that you saw in January? Is obviously a break below 115. So that's why it should be your risk management level.
Yeah, understood. Awesome. That's great. A new name, right? I just want to get the whole obesity done. ZEAL. DC. Yeah. Zeal. Yeah. It's called Zealand Pharma.
So you can see that vertical line was the momentum confirmation. So the last 3 weeks of marginal new highs, momentum hasn't confirmed it. So I'd be re-looking at this one on a pullback to the 50-day and the previous highs, which is at 513.
It's such a big bounce and momentum doesn't confirm it.
So
sell off at the end. Yeah.
Let's go back to the point here. Momentum confirmed this high, which was the 26th. From the 26th of Feb to the 13th of March, the RSI is lower than where it was on that 26th of Feb.
Yeah, this is a tricky one because it's an M&A target. I have to own it, but it's been very crazy these days.
Yeah, look, I mean, this divergence here, the stock just traded in a very flat pattern. The 50-day caught up, right?
Yeah. Was there a divergence back there? Oh yeah, there was one. Yeah, September, October, right? Yeah.
So we could just see, a flat consolidation, 50-day catches up that way.
Is there any levels I should watch to break down of? It can't be 513.4, right? It's so far away.
Well, when you get these kind of acceleration moves, there's not much else as far as support goes, right?
Yeah, I know.
So, I mean, unless you want to go to an intraday charts, there's nothing significant. There's the intraday lows you can think about, but is that significant? Unfortunately, after these type of moves to new highs, you don't get a lot of reference points to have any sort of high conviction profiles on, right?
Yeah, understood. Okay. Lonza, Lonn.
So the divergence we talked about last time has just led to pretty flat consolidation here, right?
Yeah.
So that slowing upside is getting worked off with this consolidation pattern. There's quite a lot of support again. That blue moving average is the 200-day. It lines up with your previous lows. So 436 is quite a good support area.
But
And it's
also,
working
yeah,
off the slowing upside with the trading range.
I see. Also no strength to break on the upside. Okay, got it.
Not yet, no.
Yeah.
But likewise, it hasn't broken to the downside. It's worked off the slowing upside by just holding in a range, right?
Yes, understood. Okay, then can we look at GSK and NOVN?
So it's interesting that you've got back to the 2022 highs. We can see we're back at the 1724 to
Yeah.
1750 area, and you've got the slowing upside momentum. So the breakout that you had from this trading range, you've met the upside target. You're back at the 2022 highs with the slowing upside. That should be a take profit setup.
Oh, this is a take profit setup. Okay, okay. Okay, that's great. This has been so strong. It's been killing Astra. Okay.
Yep.
And NOVN. Yep, that's right.
Yeah, so a bit disappointing here because we broke out. It didn't hold the breakout level. The key thing that needs to hold to keep, I'll just extend this line here. The series of higher lows in place, the 200-day and the lows that you made in February. So this is 85 to 86 euros is the key level to hold. Because if we can't hold that, then we've had a failed breakout here.
So this thing is not adjusted for dividend, right? Because that big move you just see 2 days ago, that was dividend. I was stunned as well. Ex-div. So should I be putting that back and say actually that wasn't a down line?
I still think if you look at this setup, you still, even if you add the dividend back, you're still above the key support area, 200-day and the rising lows, right? So it hasn't broken the structure.
Understood. So your verdict is still in holding mode, right? It's not like it's breaking down anytime.
It hasn't broken any key support areas. It's still held the 200-day and it's still kept a series of higher lows in place.
I'm trying to short this one, but it was best performer before. I was a bit worried. Okay, got it. That's ROG.
So this has had a recovery back above 50-day. There wasn't any divergence at this low, so it's sort of questionable on what type of base it is, but the fact that the recovery continues to get momentum confirming to above the 50-day, I think you reassess one at the 200-day and these previous highs, so 252 to 256 is overhead resistance.
Yeah, very sneaky. But it's been rallying with the reversal of momentum, right?
Yep.
Yeah, okay, got it. Okay, I'm gonna watch out for this ROG. But you think it's potentially a short back at the high?
I think you reassess at this 252, 256 level. Yep.
Okay, and then SAN.
We're still just hovering at the midpoints of the very broad range of 79 to 100. That midpoint is below both 50-day and 200-day, but there's no real high conviction setup here outside of that small consolidation pattern within the larger trading range.
Okay, and then MRK, the one right beside it.
So here, you have managed to recapture this old trading range, but you can see that the momentum profile, continues to show slowing upside, and that's because of this choppy nature of the move. You're not seeing a fresh momentum signal.
That was why I was thinking it was a very weird small rally, right? Yeah.
Yeah.
Okay. And so this is more like to take profit, right?
Yeah,
Yeah.
absolutely. I mean, the other thing, if momentum continues to fade, the closer you get to 171, you do then get
Yeah.
a selling opportunity or shorting opportunity using 171, 172 as a stop level.
Okay. SRT3, if it's here at all.
So that's US, right?
No.
Europe?
It's here. It's to the left.
Oh, there
left,
we
left.
go.
Yeah.
Got it. So, another one where you've recaptured the trading range, you've tried to break this resistance zone, which are the highs that you made in December as well as February, but it has come with, again, a slow momentum reading. So, this is around the midpoint of the old range, slowing upside momentum. It looks like it, pulls back and remains range bound in a tight range. So not a lot of opportunity here, maybe as a funding short, but a directional short, doesn't look that enticing in that it's a fairly tight range.
Got it. Then 2 tap to the right, FME.
So again, since that's slowing upside, resistance by the 200-day keeps on capping the upside. We've been in a sort of a drifting trading range setup. So you did have a spark up late last week. That also failed below the 200-day. So you're essentially looking at a 33, 34 euro to 39 to 41 euro trading range.
Got it. This is awesome. This is I'm short. Okay, PHIA right on the right.
So another one where, since that January rally, you've rolled back into the trading range. And again, we're sitting around the midpoint of that range. So I don't have a great risk reward setup between that 1760 and 2090 range. Because you're in a trading range, I wouldn't put a lot of emphasis on the moving averages, because you can see how you've whipped above and below them. And that makes sense when you've been in a trading range like this. So to me, there's no clear trade setup here. Reassess closer to 20 euros or 1760 basically is what I'd be looking at.
Yeah, that's right. Okay, then one step to the right, AFX and ALC. Then we'll go for Europe.
Yeah, actually, you had the divergence, which just led to a very short-term trading range. And since then, you've broken higher back into the old range. And momentum's still rising with this. So again, this looks, I'd give benefit of doubt that it can trade to the top end of the range, which is closer to that 140, 144 area.
This one's very bizarre because it's somehow consumer driven and it is IR. IR's supplier. IR is going to have a terrible 1Q, right? So is this a short? But you don't think so, right? The momentum so far.
Again, I would
short it higher.
Look closer to the 140, 144 area.
So the divergence on the bounce, right? Actually, it formed, right? Yeah, this one. Yeah.
Yeah.
This was a huge move, man.
Yep.
Okay, that's cool. Yeah, ALC on the right.
So this is one that you have cleared the 74, 75 resistance, and the RSI is still rising with it. So it does look like, again, you can extend further, and your next resistance is up at that 80 to 81 area, which are the highs that you made in 2021.
This one I was long. Then my boss was complaining that it didn't work. You see that trading range between 60 and 68. And then suddenly I didn't look at it and it broke out. What the hell? Okay. I'm just trying to learn this better. Okay, cool. We're good to Europe now. I'll go through the US ticker. Starting with Merck, right? No. ABBV.
So there's two things. This breakout, the upside target is 204.
Wow.
But the problem is this is a very slow grinding move.
Yeah.
So, and if you're long, you can probably stay long with a 20-day moving average, probably as a stop level. But if you're not long with that slowing upside momentum, I think it's too dangerous to chase. So you can see that green moving average is the 20-day. And
Yes, yes.
every time you've pulled back, you've found support at the 20-day.
Yeah.
So I think if you're long, use that as a risk management level. But if you're not long with the divergence, I'd find it difficult to chase.
Can this be shorted? Because I'm trying to
Again,
use it as a pair
I
against
think
merch.
if you
Yeah.
break the 20-day, then yes.
Ah,
Otherwise,
it's going
closer to
higher.
205. Yeah.
Oh my God. Okay, this one, right? I should have been long, and then it somehow punched me in the face from November. I don't even know why. Okay,
Yeah.
that's and then a Vertex, VRTX. No, left. Yeah, that's right.
So this has got into the holding pattern since that breakout. You can see the key support area, which you're sitting on currently, which is basically 405 to 410.
Yeah.
You are below the 50-day, so the risks of coming back to trade to 385 does look like it's growing for this one.
Okay. There's no momentum there. Okay. And since we're here, let's do Amgen and Regeneron right beside it. Yeah.
So Amgen, following that momentum divergence, reverse, broke 50-day, is now back into the old trading range. So 200-day does give you some support at 264, but the upside now should be capped by the old upper boundary of the range in the 50-day. So 288 to 296 should cap rebounds.
Can we keep shorting this for the lower end of the range to 220? Nothing supports that at the moment, right?
Yeah, I mean, I don't get a downside target. Obviously, I think maybe breaking the 200-day with momentum confirmation, you can keep on pushing it.
Yes. Okay.
Or on a rebound back to
288,
290,
yeah.
then yeah, you can.
Yeah, I was hoping for that. It didn't happen.
Yeah.
Okay. REGN. Yeah.
So here you've basically met the upside target of the trading range breakout. You have slowing upside momentum. So to me, this is at the very least a take profit. And if you break the 50-day, you do have a bit of sort of open air back towards the 900 area.
Yeah. Okay. That's Regeneron. Gilead. GILD. 2 taps to the right.
So this is probably a reverse of the other two that you're sitting on support, you're rebounding, but again, it looks like more of a trading range here. The midpoint of the trading range lines up with the moving averages, which is no surprise considering you've been in a range for over a year. So it's the levels you're looking at is basically $72 to $82.
Got it. Okay. And then no, we will go to the intuitive surgical side. Stryker and SYK and
So here you can see that 100% was the upside target from the trading range, which we've obviously met, which was 348. But what we've seen since hitting that upside target is you've had lower momentum with marginally higher prices. So you've got the classic slowing upside momentum, which makes it at least a take profit candidate.
yeah, this is prevalent across all my space. That's why we couldn't buy anything. Okay, that's not just me, right? Okay.
Yeah.
And ISRG.
So another one where you've had slowing upside from our last conversation, you've rolled back. Yes, the 50-day, the prior highs is your first support area at 373. Clearly, if you break below that, you go back into the old trading range, right? And the 200-day gives you first support within that old trading range.
Got it. BSX to the far left. Yeah. Number 2 tap. Yeah. Oh no, not Dexcom. BSX right beside it.
Oh, BSX.
Yeah.
Well, it almost looks the same as Stryker, I guess. No surprise. Met and surpassed the upside target. And that divergence we talked about in our previous conversation, you're getting a bit of a reaction now. 200-day is your first support at 63. But that's also a take profit setup.
Sorry, I was on mute. Got it. BDX. That would be, yeah, right, exactly.
So this one's now, we talked about it once it broke down here, best case, it goes into a holding trading range, and that's pretty much what you've seen form above 230 and below basically 250. So pretty trendless flat environment there.
Okay, so it's nothing there. Then Dexcom. No, sorry, to flip back all the way to the third tab. DXCM. Far left. Oh no, as in
Oh, sorry, it was on the same.
just now that but yeah, it's on there. Yeah, here. Left. Yeah, that's the one.
So I did test the 200-day, had a rebound, but that rebound's now running to resistance, and the RSI is lower here than it was back with your move in December. So this to me also looks like a take profit likely to be capped by this 135, 136 resistance.
Is it a
zone.
short? Yeah.
Well, I think you can short it, using a stop above 141 to remain range bound there.
Yeah, I'm thinking this one was a surprise. It swings around, right? Okay, got it. Dexcom INSP in the middle of the tab. Yeah, right. Yeah, that's right. This group here, INSP and PODD. No, it's here, right, left of it.
Oh, there we go.
Yeah.
We had the divergence here below the 200-day, and it just looks like we're settling in the old range where 205, 216 is the top of the range, and 180 to 160 to 170 is the bottom end of the range.
Got it. But this one is about to be killed by Lily. the readout is against them, so I was checking. Okay, and then one tap to the right, PODD.
Also one where we had the rebound in the fourth quarter. Since then, it's 200 days still resistance. It's now fallen back into the old trading range. So the 50-day is immediate resistance with the lower boundary of the old trading range at that 191.40 area. So that should cap or limit the upside potential.
But this is hard to short, right? It's come back quite sharply. It's
Well,
supposed to go down to 121, but it's not doing any of that, right?
I think that you've bounced back to this resistance zone. You can manage the risk quite tightly with 190, 140, 192 as a stop level to look for this rebound to stall here.
Okay, then two taps to the right, ABT.
So here we have seen price clear through that 110, 115 area, but that has come at the expense of momentum not confirming the highs. So again, we do have this divergence, which to me should at least see a pullback and retest of the 115 area, and then you can reassess.
This one I lost money shorting it. That's why I'm checking. Okay, and just to the left of it is the mRNA. Yeah, I forgot a bit about this crazy one. Yeah,
so this is the interesting one where we talked about pulling back needs to hold above this horizontal line, which it pretty much does, and this is the breakout area at 115. If you break above 115, you have a clean run at the 150 to 160 area.
But is it likely to break down? I'm thinking more of a short.
No, it's more of a trading range. So if you wanted to short it, you can use the breakout area as a stop, being 115.
Yeah.
And look for a move back to the bottom of the range.
Yeah, but with this XBI this way is scary, right? Yeah, I get it. Okay, awesome. UNH. Oh, sorry. Before we go to UNH, Pfizer, forgot. Pfizer, BMY, yeah, J&J. Yeah, that's right. It's on the left. Left. Yeah, that group here. Yeah, left. Oh no, left. Pfizer, PFE first. Yeah, that's right.
So basically retested the lows. So this 25, 26 support area is holding. You can see another divergence between the December and the retest of the lows in March. So essentially a trading range, the resistance is at $30. So it looks like you probably bounce, retest $30, and that's the basing pattern that's trying to develop here. So that's Pfizer.
This is more bullish. Okay, J&J. Yeah.
J&J. We're still talking about that same broad trading range. The interesting thing here is if you break above the midpoint, which is this 162 area, with momentum having room to the upside, there's potential to re-rate to the top of the range.
Okay, this is scary because there is a big thing coming for it this Friday.
Right. Yeah, I mean, the potential is to break through this 162, 163 and trade up to 176.
Okay. Then next is BMY on this tab. I can't find it. BMY.
I did see it earlier on.
Oh, it's on a different tab. Oh yeah, it's here. The BMY, but it's on the right, far right. Yeah, that's right.
So, I mean, this is actually ahead of the Pfizer chart, which also had the double bottom. You can see how it's broken out here. This base momentum still confirming the highs gets you to $57. So a little bit more to go on the upside. And obviously the 200 days at 56, but 56 to 57 looks like at least a target level for the rebound.
Why are all these hopeless guys like BMY and Roche rallying? Was there any indications they were going to do so other than divergence, right? Yeah.
Well, the divergence, and in both Pfizer, but BMY's case, you've had a pretty distinct basing pattern formed here, right?
Oh, okay. Then they also have a big catalyst this Friday. It's with J&J, so right. I better get out of it. Okay. Then yeah, since we're here, I just want to make sure I cover all of that. BIP is BIP here. BIP is in the previous tab. Sorry, BIIB around Pfizer. Sorry. Yeah, beside Pfizer. Yeah, that's right. Then we will do UNH. Thank you.
So this does show the slowing downside momentum again. So we've had at least short-term rebounds. We're back into the old trading range. So look for a 220 to 252, 256 type trading range developing here.
And this one's more upward trending, right, BIP?
Well, I would say, at best, this is a neutral trading range.
Yeah. No, but it's more likely to go up because it's at the bottom of the trading range, right?
Yeah. Yep.
Yeah, and the divergence. Yep. Got it. Okay.
Yep.
That's BIP. Yeah, so UNH in the previous tab. Yeah. This one got hammered this year. I'm not sure.
So this one, the divergence, the upper boundary worked nicely, and it's it still looks like it works its way. You've had rebounds, but they've made lower highs within that range. It does look like you can work towards the bottom of the range around that
440, right? Yeah.
448, 440 area. Yep.
Okay, and then the next two is ELV and HUM. Just want to cover all of those.
So ELV, I mean, the relative outperformer, but it's still in the trading range that you've had going back to 2022. The top of that range is 523 to 540. Now, if you do test that area, you'd likely set up a divergence and stay range bound. So that would be more of a take profit level.
Got it. And then HUM.
So this one's got its first signs of slowing downside momentum. The lows that you made this month, the RSI hasn't confirmed it.
But this is the breakdown from that line right above. Is this a scary thing or no? Or is it going to 100? Yeah, the 318 part.
So 3181 was the downside target from this level, but with momentum slowing now to the downside,
it probably won't get there, right? Yeah.
Well, even if it does get there, you've got slowing downside. You should be covering shorts into weakness here. This is not a fresh or new sell idea, I don't think.
And what to look out for if there's a bounce? When do we chase that? Yeah. Hello?
Yeah, I'm just, I mean, there's no pattern to break out at this point. The fact that you've got divergence, you should be.
It's for a bounce, right?
In that,
yeah.
No, the old boundary of support, the top end of that is 355. So, you know, breaking above that, 50 days still some way off before you even break above that level. So, yeah, that's a tricky question to give you anything from a high conviction side, you know, what to chase on a rebound. There's no structure, but you should at least be reducing
the shorts.
Shorts, yeah.
Understood. And CI, 2 taps to the right. Yeah, and I'll cover MCK as well.
So this has broken above that downtrend resistance. Momentum has confirmed the highs in February. This last push up here, again, you can see that RSI is not, not tracking it.
But this thing is bucking the whole trend, man. So it's a peer of UNH, right? Number 2 guy.
Right. Yeah.
Yeah. Okay. Is this a short? It probably is, right? If it's a pair.
Well, I think you can. You know, using a 350 sort of round number resistance zone to look for it to, you know, at least trade back to that 50-day.
Yes, awesome. MCK, 1 tap to the right of that. Then we'll do XLV and XBI.
Yes, I mean, this is interesting because you had that slowing upside that led to, you know, 3 months of ranging. The new highs, momentum hasn't confirmed it. So, you know, again, we should expect, like Lily, further ranging action. The 50-day, the prior highs around 495 looks like support and resistance up at 540. So more of a take profit, look for a trading range.
No, this guy's the supplier of Lily. That's why it's been so powerful, you know. the distributor.
Well, I guess with Lily consolidating, we shouldn't be surprised to see this also consolidate. Again, Lily hasn't broken any key support areas, neither has MCK, but you do have slowing upside suggesting a consolidation.
Yeah, very stable stock. Okay. Then XLV and XBI. Then we go on to Japan. Thank you.
So XLV still held the breakout. And remember that breakout gives you an upside target closer to 160. The momentum profile is still pretty consistent. So while we might be getting to a holding pattern here, the breakout still gives you an ultimate upside target of 160.
This is funny because none of the components are breaking out, but the index is supposed to.
Well, I guess you're seeing some of the heavyweights, like in Johnson & Johnson, rebounding off the lows, and you've had some of the other stocks in uptrend. So you know, the combination of rotation beneath the surface, you know,
I got it. No, it's a great reminder. I'll go cover J&J and BMY today. Okay, XLV, XBI, sorry. It's a previous tab, actually.
I thought I'd put it in this, what was in this one.
Oh, yeah, did separate tabs. Okay, cool.
So this is where you had the breakout, but momentum hadn't confirmed the move. So you've pulled back to the breakout point. I mean, I think sort of two things. This is in a correction pullback, and you know we test 92. The longer term profile is that, you know, ultimately we do break out of this range, and you know you can get a 141 upside target, but short term a bit of a pause and correction still unfolding.
This one's very hard to hedge with. Okay, I was hoping the rates would help. Okay, then we're good. We're good with this one. Can we just flip to Japan? Okay.
Yep.
The first one is Takeda 24502. Yeah, that's right.
So had the divergence, had the rebound, and now pretty much a holding pattern, where 4,500 is the top end of the range and 4,170 is essentially the bottom end of the range. So yeah, more of a holding pattern on this one.
Okay, then 4901, tricky one. Yeah, that's right.
So we tagged the upside target recently. So it was a 10,198. Obviously a bit of volatility, but you did get to that upside target. You do have slowing upside momentum now. So, two ways to think about this. The breakouts played out. You've met the upside target. You've got slowing upside. Taking profit would make sense. If you wanted to stay long, use the 50-day as a stop level, which is at
That was brilliant.
93.52.
Yeah, no, but it didn't get close to the 50-day. It always bounces before that, right? See. Yeah.
There's no new upside target, right? So the point is you can use this as a stop
get back
level.
to. Yeah.
And the fact that you got up to the upside target, this setup has played out. So if we go through another trading range like this, like it did here for 3-4 months, then you've got the potential for a new breakout. But as it sits right now, I'd be expecting a new consolidation pattern to develop.
Okay. 4503.
So an interesting one where we bounced, we keep on sort of failing below the 50-day, but the new lows, momentum's not confirming it. So to me, this is still a cover short.
When do you think it's a buy? It's a tricky one. I'm scared of its fundamentals, but I've seen
Yeah, but
why do
I
that.
guess you've got a pretty sort of clear level where things change if you break above the 50-day at 1681. So the fact that you've already got slowing downside momentum, if you break above the 50-day at 1681, that would change the picture there and be more constructive. So I'd use the 50-day as a trigger.
I see. 7701. Yeah, 2 taps to the left. Oh, yeah, in the middle. Yeah, that's right.
So this one's still, that broad trading range. Can it trade to the top of the range? Yes, but it's not a high conviction setup.
Got it. 4565 is tricky. Yeah, on the far left. Yeah, that's right. Yeah. Wow, the 200-day is like a fake thing.
Yeah, I mean, I guess the other thing that you can note here, after these divergences that you didn't hold and you've come back into the trading range, it's fairly common for failed breakouts to go to the lower boundary again. So, looking at a 1380 to 1600 trading range does look like what it's trying to set up here.
Yeah, I should short it. Okay, got it. That would be oh, then we're good with the long side. 4507. Yeah, to the right. Yeah.
So you do have, one, the base, you've met the upside target, the secondary trading range breakout, you've met that upside target. You into this resistance zone. I mean, the interesting thing there is I don't have a classic divergence though. So I am into.
Yeah, it's very strange, right?
Yeah,
what
you can see
what
that
does it take to make the divergence?
So yeah.
What does it take to make the divergence?
Basically, another run up to this 8100 area on the RSI at a lower level.
Ah, wow, this one is really tricky. I lost a lot of money on this one. So this one, what's your verdict, or what should I be looking out for? Any levels?
Basically, a test of 8100 with momentum slower. That would give you another selling signal. Obviously, what changes the structure is if you break out above 8100 with momentum confirming it, that would be quite supportive.
Got it. Okay. Then 4523, third tap from the left. From the left, far left. Yeah, that's the one.
Yeah, so this is another tricky one to chart. A lot of gaps, a lot of spark moves. You had a divergence here, it didn't work. Momentum confirmed the lows.
Yeah.
And now you've reset with another divergence. But I think the key message here is how the 50 days capped the upside essentially for 12 months.
Yeah, I'm looking to short this. We're close to it, right? Yeah.
Yeah, you're close to it. So 6734 is the 50-day. You can use that as a stop level to short it even here.
Perfect. At least we have something actionable. 4578. Otsuka. This one's shit. Like, kill me as well. Yeah.
So there's that little upside target of 6269, or a little bit more upside to that upside target again. I'd be looking for a push towards that with RSI lagging to provide that opportunity.
Or to provide a divergence, right? Yeah.
Yeah.
Okay. This is tricky one. 4528. Where's that? Where's that thing? Oh yeah, here we go.
So another, hasn't quite broken down because momentum didn't confirm it. So it looks like we essentially sort of range bound 2400. Top of the range is at 2787. So still very much a trading range, and you do have divergence at these recent lows to suggest that we should stay range bound. There's no pickup in downside momentum.
Okay, great. Then 4543 and 7733. 4543. This is the math tax line.
So 4543 was it?
43, yeah. The left. Yeah, that's the one.
So a little bit more in this breakout from that trading range. Momentum's confirmed the recent highs, and the upside target there is still 6484. So it still looks like you've got a bit more to go.
This one is the yen and the rates are moving against it. Any chance it's a short? They didn't form
No
the
divergence.
divergence.
I would reassess closer to 6484 if there is any signs of a divergence.
Okay, then 2 taps to the left of this, 7733.
So we're still dealing with this trading range of 1980 to 2250. So that's still a range. While it's a neutral range, the structure is the range has a bullish bias to it because of the higher lows. So, a break above that 2250, it does then point towards a 2750 type move.
Yeah, okay, got it. Okay, I think we go with Japan. Can we just flip over to China? Just the 2 tickers, right? Hung Rei 600 276. Oh yeah, in the middle, right?
So basically middle of the range, right? So between 50-day and 200-day, that little range is within the broader trading range of 3750 to 50 renminbi. So yeah, nothing really actionable at this point.
Because the result's going to be bad. I'm just thinking whether it'll go back to 37. Not really. Right? Yeah.
I mean, again, you can try and manufacture a trade within the range.
Yeah.
High conviction, no, but I mean, you've got a little bit more downside to the bottom of the range, and you do, that's 16% to the bottom of the range and 11% to the top of the range. So
yeah, okay. Then just 1 tap to the left, 3015.
So all about the 50-day again. This is where you've had rebounds that have failed at it. I mean, I heard you earlier, expect bad results. Maybe this does retest the lows, but just look out if you see momentum not confirm that, you'll get a divergence to basically cover shorts on a retest of the lows.
Okay. Then 300,765. This 5 taps to the right. No, yeah, that's right. Then the last one is 1177. Thank you.
Yeah, I mean, it's a pretty volatile one, but it did test and rebound off the old breakout area. Momentum's still rising with this. It has taken back the 50-day. So this does look like it can trade back to
45. Yeah.
Yeah, that 48 area.
Yeah. Then 10 taps to the left, 1177. Big one, yeah.
So another one where it's pretty much a range between 258 and 360. You can see the 200-day and the February highs. We need a break above 323 to have a run at that 360 area. So another stock sort of sitting in the middle of the trading range.
Okay, great. Thank you so much, Laurence. I know I'm just out of time today, right? I'll buzz you for the next one. Thank you. You take care. Okay, bye-bye.